Everybody wants to leave a legacy. You want something left
Yeah,
behind for the kids.
absolutely.
Too. Yeah.
Yeah.
We talked about insurance today, and you said you've done this for 7 years. The one thing,
Welcome to episode 6 of the Florida Real Estate Life podcast. I'm Peter Pappas, your host, and we have a special podcast today. It's going to be a little different than what we've done before in the past. You've seen Jeff Duberly before from Bella Title. He's here to help us out. And we have a special guest, Andres Yepes from Yepes and Associates, based in Vieira. He's a financial advisor. How are you, Andres?
Good. Thanks for having me, Pete. Appreciate it.
Yeah, absolutely. I was thinking, I know a lot of realtors who are self-employed individuals. I know a lot of people in title and the whole real estate industry per se. And what I do know is when you're a self-employed individual, a lot of times you're winging it when it comes to your finances. You're making good money. You're getting a check or two every month, sometimes 3 if you're doing really well, 4 or 5, whatever. But you don't have a 401k plan where money's getting taken out. You don't have a set plan most cases. Some people are really good about their finances, but a lot of people don't have a plan. They don't know, I should save this much. Where do I put it? How do I do this? So, and a lot of time it's just getting started. So with that said, we have a couple of questions we're going to be asking you, and you can tell us maybe the best way to go forward with everything. So I'm going to ask the first question, and it is, discuss the challenges self-employed individuals face in terms of financial planning and retirement savings.
Yeah, and I think, again, thanks for having me. And I think whether you're a realtor or any business owner, like you said, it's the challenge is always time. You know, it's having the time to invest back into yourself, whether that be financially or health-wise or, spiritually, whatever that may be. I think it's just finding that time. So I do know, however, that the self-employed individuals, business owners that I've helped, once you put in that time, once you dedicate a short amount of time to get it done, then it's off your plate. Then now you've passed that to somebody else, me, a health coach, any of that sort that now help you along the way. And so it's just being conscious and being intentional about investing back into you. So,
and maybe we're going to talk about this, and so because I know we have more questions, but in that little bit of time you're describing it, is this 5 minutes, or is this like when you say intentional with your time? And are we going to talk about what you're doing in that time?
Yeah. So specifically, if you were to hire me to construct a financial plan, I would say it could take about a month's worth. And what we do is we will meet for an hour, 4 weeks in a row, or every other week. So it could take a month or two, but again, it's just an hour to work on the investment plan. It's another hour to work on the insurance plan. It's another hour to work on taxes and estate planning. And so,
and how much are you getting done in that hour with them, or is it like, hey, this is what I need you to work on, and that's what you're giving them that hour, and then over the next week they need to work on it themselves?
Yeah.
And then they're going to meet with you and you can overlook that again?
Sure. So my structure is, so it is every 2 weeks. And so when I said a month, I meant like cumulative. You could probably get it done in a month depending on how often we meet. But my standard process is, let's meet, and I address probably 6 main areas of financial planning, which is, you got your foundational piece, which we talk about budgeting, we talk about emergency funds, we talk about, life situations, whether you're going through, a new marriage, a divorce, so we've got to build that foundational piece. And then then talk about investments. We cover retirement planning, insurance, tax, and then estate. So those 6 areas, what I do is sometimes I can combine 2 during one meeting. And so if it was you, Jeff, then I would say, okay, let's talk about it for an hour. Let's go through this cycle of finding out what your needs are. Where are you at with this particular area of the financial plan? What have you done in place? What have you put in place? I'm sorry. And then now go and do some homework that I need you to do, and then give it back to me in a week's time, and then give me a week to then prepare for what I'm going to recommend, or questions that I may have, and so on and so forth. So.
All right, the next question I have for you is, how best can you help a self-employed individual with their financial planning? That's kind of what we just talked about. So we're going to move on from that one. What I'm really into is a lot of self-employed people don't have 401ks. So I want to see when you're talking to somebody like that, what's the best tax-efficient strategy for them to be putting their money in, like an IRA probably, a Roth IRA?
Yeah, so it just depends. Roths are good, but they have a lot of limitations to them when it comes to contribution limits and income limits. And so, so if you're having a really good year, then we may not be able to do that unless we set up a Roth 401k. But I always think about being talking about how much is there of a surplus at the end of the year. Mm-hmm. So when I build the plan out, one of the cool things about the planning software that I use is we get it down to pretty much the penny as to what your income and expenses are. And I know, like, for realtors specifically, the income fluctuates, but I do go back a couple of years, look at tax returns, and kind of go from there. And so based on that surplus, now we have a number that we can work with, right? Mm-hmm. And so it just depends. If someone has a large surplus, then we look at what is the best option to do for that particular surplus, and then we try to fulfill, again, several needs within that. So if you're underinsured, we got to cover that with the surplus. If you don't have disability insurance put in place as a self-employed individual, we got to make sure that we use some of that surplus for that. So it's a pyramid where we'd start off with the a good base, and then we go from there. And then once we got that covered, then we can focus on retirement, and specifically what gives you the biggest savings opportunity is a 401k. Is within the 401k structure. And one of the cool things that I have with people I do the 401k through is that they combine the legal aspect or the tax aspect of the 401k, because it is a more complex retirement solution. But for those that are self-employed and are working on their own, you could do a solo 401k for you and your spouse, and that would be a great solution as well. If there's not that much of a surplus, then yes, we can talk about a SEP. We can talk about a traditional IRA.
You've used the word surplus multiple times. Mm-hmm. Describe what is the surplus?
So surplus is just a leftover on an annual basis that we can then break down on a monthly basis. So how much is there disposable income that you have that we can plan for? I've been through Financial Peace and Dave Ramsey and all that, and I teach a lot of those principles when I do financial planning. And one of the things that he says, which I couldn't agree more, is you have to direct your dollars, otherwise they just kind of disappear.
So with that surplus, I mean, because you're talking about 401k, and what's your opinion? Am I throwing as much of that surplus in to the 401k, or talk about like diversifying into like emergency funds, for example?
Yeah, so good point. So what I do is I try to break it down into buckets. So you have your what we call tax defer bucket, and that's just money that you haven't been taxed on. And I guess for realtors and self-employed individuals, those assets have been taxed because it's you don't have the ability to well, I guess you do, because if you get compensated for a sale, and then if you put that money into a tax deferral bucket, then come tax time, those dollars are not going to be reported.
Right.
They're going to be taxed down the road when you retire. So that will be that bucket. Then we want to do some into the tax-free bucket, and what that is monies that have been taxed and that they now grow tax-free until retirement. And so when it comes time to actually getting those funds to live off in retirement, you won't have to worry about tax liability at that point. And then there's the taxable bucket, or the emergency fund bucket, that kind of starts that bucket, but it's also important when it comes to the distribution stage in retirement. So we want to have the three buckets so that there's some flexibility when it comes to that time that you need to access those funds. So that's kind of cool in the planning aspect. The other thing too is creating what I call a or what's been known in our industry as a volatility shield. So, Pete, you were talking about doing annuities and so on for retirement, and so diversification is not just in the tax strategies or the tax buckets that you use, but it's also in what products you choose to invest your money.
Sure.
And so I'm really a huge proponent on having some sort of volatility shield when it comes time to access your retirement funds in retirement. And so, we can have some funds that are growth oriented. We can have some funds that are more, that have some level of protection. That becomes really important in that distribution stage because, for example, you have a year like we had last year in 2022, and so if all your assets were invested in growth-like vehicles or didn't have necessarily a protection and you need the income from them, then now you're taking a distribution from an asset that just decreased 20% in value. And so that, so whereas if we had some asset that was protected, then we would take the income off of that and let the other asset recover like it did this year. And so, that's the value of having
the plan.
Yeah, the plan and just the buckets and so on and so forth.
Yeah, there's a myth by the layman. Everybody likes the sexy stock. They want to think that they're Gordon Gekko on the movie Wall Street, or they watched The Big Short a few times, or and the myth is that you can't make money if the stock market is down, or if the economy's not doing great. That's not the case at all. That's why you need somebody who knows the economy inside and out, and there's ways you can invest in bonds, and there's other ways to protect yourself when the economy is not doing great. One thing I wanted to mention, because this was explained to me a few years ago, and I thought it was just so profound when it was said to me. This guy, Roger, worked for Mass Mutual for like 30 years, smart guy. And his elevator speech, when he would talk to a new client or even just anybody random, he would always say to them, and I do this too as a realtor, I'll ask somebody, if we're making conversation, I'll say, what do you do for a living? Because almost always after they say it, they're going to ask you. And if they ask me, I'll say, yeah, I'm a realtor. So yeah, if you ever need anybody to help you buy or sell or if you know anybody that's looking to buy or sell, please, think about me, and then I'll tell them why. When he would do that, they would ask him what you do for a living, and he would say, I help people come up with a plan to help them make sure they have a paycheck for the rest of their life. And they're like, what do you mean? And, growing up when I did, and even, they're still around. The big thing was, and your grandfather probably had it, a pension. Pensioners, people that are working, like policemen, firefighters, factory workers. They are teachers, not so much anymore, but in New Jersey they used to all have pensions. They work for all these years, and their money's going into a pension. That was their 401k. And if you were to ask your grandfather, hey, what's the pension? What is this thing? And he'd be like, well, I'm going to work till I'm age 60, and when I retire age 60, I'm going to get a paycheck for $6,000 a month for the rest of my life. And if you were to ask him, well, how much is in your pension? He would have no idea. So now we have 401ks. And if you ask somebody how much is in their 401k, they'll probably be able to tell you to the penny what's in their 401k, because people are always checking it. But if you were to ask them, okay, when do you want to retire? Maybe 60, 65, see how things go. Well, how are you going to take that money out when you turn 65? I don't know. Haven't really thought about it. And the bigger question is, will that be enough till the day you die? So those are all things that need to be answered and planned for, but nobody is doing that because they just don't realize that they're going to have to do that till sometimes it's too late.
Yeah, so two things. One, it just proves the importance of what I do and why I get up every day, and I just want to help as many people as possible because we don't have pensions anymore. And so it does create this fire in me to go out and try to help as many people as possible. And, to your point, it's almost like it's flipped. Like, the folks that work for corporations that have a 401k, they are contributing and, they really don't know like which investments to pick and so on and so forth. But they do want to contribute. They do want to save for retirement, but is it going to be enough, And so whereas before it used to be like, well, I know I'll work until, like, to your point, 60, and then when I retire at 65, I can start getting this monthly income that's guaranteed for the rest of my life. So that's one aspect of what I do that is really so important. And so the elevator pitch, we were all trained on that, and I've got plenty of my own, but essentially it's just helping people to make sure that they achieve their financial goals, and it's like anything else in your life, is unless it's in front of you, you don't tend to devote your time to it until it is in front of you, and by that time it could be late, too late. So I'm always urging people at any age to just go see somebody, and the thing with me is if whether you have $200 extra a month or $2,000 or $20,000, we can work. I can work with you to help you.
Sure.
Because there are just things that I know that the other folks out there may not know, in the sense of this is what I do for a living.
Right.
You kind of just mentioned, and I guess I want to ask, and so the advice you would give to a lot of people, or to anyone that wants to start saving, or doesn't know how to start or how much they need to start. You say 200 or 20,000, it can be anywhere. And so the advice you would give is what I'm curious about. And then after that advice that you can just give, to these cameras, your elevator pitch or whatever it is, but then why, if, what mistakes, if this is the right way, if you were to give me that advice and I was arrogant enough to take, okay, well, he just gave me all the advice. Why do I need him anymore?
Mm-hmm.
Why should somebody still work or see a professional past that advice?
Yeah. And, I think, for us guys, I think that's just a common thing
Sure.
of, hey, let's learn it and let's just do it ourselves, which is fine. But do you have the self-discipline to do it on an ongoing basis?
So in a way, you're helping people hold them accountable as well.
It's like a personal trainer.
Yes,
for your finances.
And so one of the things that I do is I do charge for those services of financial planning. And I'm a true believer that if where you put your money and your time in is you're gonna, if you make a financial investment into something, you're gonna make sure that you find the time for it. And so I just don't hand out the information. Although if it's a friend or someone asks me, hey, what do I do? I'd be more than happy to help. But it's just, do you have the discipline? And then things are just more complex nowadays than, possibly they were back when they were pensions, or when they, folks that used to work one job for 40 years and then that was it. That's not the case anymore. It's our laws are constantly changing. So I think it's just part of evolving in a social way and in a social economical way that you just are going to need more help because things constantly evolve, things constantly change. My situation changes. I leave this job, I go to that job. What do I do with that retirement account? And honestly, I think some of the values that we used to have in this country as far as saving, they're not there anymore. And so people are now more than ever in need of someone that helps them, that reminds them, is this something that you really need, or are we now sacrificing something now for something that can give you a better payoff in the future when you really need it? So I see myself as being a almost like a filter to the marketing strategies and everything that we fall trap to. The own and now type of mentality, is let's shift that mindset and get back to saving 10% of your paycheck every month and not having as much debt as possible. And so to your point, I think that there's still a major need for people like me.
There's a lot of different pieces to the financial puzzle, and I'm a big proponent of life insurance. I think it's incredibly important. And a lot of people don't realize that there's life insurance that can also be used as, it's not just life insurance. It's also an economic vehicle where you can make a lot of money doing it. But so everybody that owns a house has a mortgage. Not everybody, but I would say a lot of people that own a house don't own it outright. They owe money to the bank. If something was to happen to one of the people that live in that house, if your spouse was to die, even if you were the major breadwinner, you would still need life insurance, because now all of a sudden you've got a house full of kids probably, and you're by yourself and you're still trying to earn money, and now you're going to have to start paying for help, or you're going to need to make some changes. And that's where the life insurance will come into play. And I think that a lot of people don't think of it that way, but that's a big piece of the puzzle too.
So far we've talked about, taxes a little bit, and that foundational piece I was talking about, retirement planning. Insurance planning it's another major block to the planning process, my planning process. And it should be for any financial planner or advisor. But I typically start with, there's the life insurance conversation, there's a disability conversation, the property conversation, and then long-term care too, which is a big one that people don't think about, because again, that's late into your later years.
And the younger you are when you get these things, the cheaper they are.
Yes.
Like my parents now, my dad is 86 and in need of long-term care. They have a policy in place where they're gonna once they turn that policy on, they're gonna get $10,000 a month for 10 years to help them.
And I know your family, and think about how much help that is for your mom.
Sure.
Right.
Yeah.
Which is historically the typical, situation. The husband tends to decrease, his health decreases. And so now the wife is having to be the medical caregiver. You don't want that situation because you're not in a capacity to do that at your age now, and you don't have the training to do it, and so so that's my job, is to prevent that from happening to my clients, whether it be a wife or a husband. How do we make sure that we protect you so that you can be the care manager and not the care provider? And so, but I don't know if it's just because I'm getting older, or if it's because I just know more people now than I did before. But a lot of situations lately, guys in their 40s, 50s that are having strokes or things like that, and that to me is scary. That to me is it's a wake up call, and it just, again, reiterates the point of how important disability insurance is.
Agreed. Yeah.
And how you want to continue to provide for your family, even if you can't do the job that you were trained to do or that you had a career on. So that's a big piece as well that I cover. Life insurance is it's an animal in itself, in that you can go from the basic term policies, 20, 25, 30 years, which for most individuals, it's good enough.
Sure.
There are some policies out there that we can use as investment vehicles for retirement, and I've used them a lot in my practice with clients that have more surplus, because again, when we talk about the buckets, some life insurance policies can become also that tax-free bucket in retirement, and the cash value that they built and what you're able to do with that cash value down the road. And so it's definitely a tool. As far as being a homeowner or not, I think anytime that you have something that you care about, insurance is should be part of that conversation, right? So, Jeff, with small kids, you too.
Yeah.
We should always be thinking about that.
I have life insurance.
Yeah.
Oh, yeah.
And it's important to know how much you should have, and what your goals are. If for example, if you have a spouse or a wife and kids, and hey, I don't want my wife to worry about our mortgage, so I want to pay off our mortgage with that death benefit. I want to send the kids to college with that death benefit, and so. Yeah.
Jeff, do you have life insurance?
I do not.
Okay. So, a strapping young man who's 21 years old?
A couple years younger.
A couple years younger.
Yeah, honestly, it'd be so much cheaper to get it now. I'm not putting you on the spot. I'm just saying. So, a young guy buying, I remember I was in my mid-20s, and I didn't have a wife, kids, or even a house, and I was buying certain types of life insurance back then, just because I liked it, and I knew that it was permanent, the one I got, and I thought it was, a good thing to do. I knew I would eventually have those things, but it was so much cheaper to get it at that age than it will be. I remember I had a term policy that expired, and I was, it was a few years ago. So now I'm in my mid to late 40s, and I was like, man, the price is definitely a lot more than it was the first time I bought this.
Yeah, for sure. And I think too, a lot of people are underinsured.
Sure.
That's what I found out too. And so you don't realize how much like coverage you need until we work out a plan, and you realize, okay, this is really more than a lot of times. To my clients, they want to think of on a situation as to, hey, let's say husband and wife. I'm the husband. I pass away. I want my wife to be able to go back to school and go get another degree, or get something along those lines, so we can offer that protection as well. And then the last piece of the planning process is the estate planning process, which, again, you don't have to be ultra rich to have a estate plan, and everybody should have one.
Yeah.
Just to kind of dictate your wishes and what you want things, how you want things to happen, and in the event of a death, or God forbid, you need a power of attorney for financial matters or for medical matters, and so we covered that too.
Yeah. I've never met anybody that I've talked to about these things that has disagreed. Maybe you'll get some wise guy, that's online and saying, I know all about Bitcoin. That's where I'm gonna make my money.
Right.
But most people that have, a rational head on their shoulders are gonna hear about financial planning and committing monthly dollars to your future, or getting life insurance or disability insurance or whatever, and they're gonna be like, yeah, that all sounds great.
It all makes sense. Yeah.
There's nobody that's ever, none of this stuff is controversial. This is all perfectly laid out for you to have a nice, great life if you just follow a plan. But a lot of people are like, not right now.
I think people don't know what they don't know.
Yeah.
And so it's kind of like hiring a realtor.
Sure.
A lot of people would want to do it on their own.
Sure.
And that's when you go, oh gosh,
Yeah.
please don't do that.
Yeah, sure.
You
most
know?
most for sale by owners end up leaving a lot of money on
Yes,
the table. They don't
absolutely.
get the value
But it's I don't know any different.
Right.
And so again, I want to thank you for having me, because it's just a way to spread out information and send out information and say, take time, take some time to work with someone so that you don't have to worry about these things anymore. Because we could always say, that's not going to happen to me, or, but you just never know. And then, planning for retirement. I mean, we don't have, like, especially if you're a realtor or self-employed person, you don't have a pension. You don't have anything that you can, count on when it comes into those later years.
I think one of the things that was hard when you mention all that stuff, that people don't disagree. I think these days, because information is spread so much, is everybody's worried about scams as well.
Mm-hmm.
And you hear these things where, like, you'll have these guys, and whether call it a get rich quick or anything like that, but they sell life insurance because they're going to make all this money selling life insurance. Mm-hmm. And then you hear that in return, and it's like, man, if this guy's selling me life insurance and he's going to make all this money off of me, then where's the money going? Is it going to him? Is it going to protect me?
Yeah.
And I think that there's this, I don't know if it's a false narrative. I'm not an expert in that, but I think it does make a lot of people nervous as well. Yeah. So maybe it's not necessarily that it's not the right time, but there's a stigma that surrounds it that's negative.
Yeah, thank you, Jeff. I think that's a point that we missed, and that is how much I have to battle every day to fight that stigma in the industry, due to the fact that the guys that came before me sometimes, and again, this is probably many, many years ago, so I don't even think it's probably the guys the guys that came before me. But yeah, there was a lot of scams. There was a lot of people that did, wrong things, and that sold things that they shouldn't have. And one of the things I found, though, through recent studies and also when I got licensed, is you got to be pretty dumb to try to sell something that doesn't benefit the client, because it's just like the regulators just give you this textbook that pretty much every page says do what's right for the client. And so for you to not do that, like, I just don't even know how you can get away with it. There are things that I still think advisors could do now that I don't know if it's to the ultimate benefit of the client, but specifically when we're talking about life insurance, I mean a term policy, which is mostly what we end up selling anyway, it's minimal on what we make as far as
You don't make much
the
on it.
commission or anything like that. If you try to sell other types of insurance, I would just caution people to, when you try to do that without a financial plan to back that recommendation, that could be something that you want to just investigate a little bit more. But if you have a financial plan and if you're working with someone that is backing those recommendations with the plan, then I think that creates then, some of that comfort and confidence in saying, okay, I think this is really the best thing for me. So that's what I tell clients. As I said, any recommendation that I make is based on what's best for your overall plan, But yeah, the idea of and then something else that I found now doing this for 7 years is, and I'm people out there that have been doing it much longer and are probably know heck of a lot more than me, but you get into the business just like a lot of businesses, right? You want to make money and you see like, the fruits of that labor. But when you get in it and you understand the position that you are being put in as far as this fiduciary position, and what that means is the definition of a fiduciary is I know more about this issue than you, and so you now have that trust in me to give you that best recommendation for you. And unless you're doing that, you're not going to be in this business for a long time, So a lot of people say, well, you're a fiduciary or not. I would say most advisors are there acting in a fiduciary capacity in the sense that they are doing what's best for the client,
Perfectly said.
And there are many fiduciaries. When you're a realtor,
You have to be a fiduciary.
you have to be a fiduciary because, again, I'm trusting you that
Sure.
you're going to do what's best interest for me and not for you. So, yeah.
A lot of realtors think their perfect retirement plan is to buy, 3 or 4 homes or maybe some commercial property, and you have that, income that's coming in every month. That'll be and it's a great way to go about it, but that's just a piece. So, I always say you have that piece, you need other pieces too. You need like 4 or 5 pieces in today's world to really, say. My mom always says to me, "You're gonna want to travel when you're older too." That's you're gonna want this when you're older too. So, man, they're a family of savers, and and I definitely grew up in a different time where wants sometimes outweighed needs.
Right.
Do I need this? No, not at all.
Yeah.
If I want it. So yeah, one other thing I wanted to talk about before we wrap up, Jeff, you had said there's a stigma, and that's true for a lot of professions, and the number one way to combat that is the power of the referral.
Mm-hmm.
So if Jeff, you and I are getting a cup of coffee together or a drink or whatever, and we're talking, and you're telling me, man, I don't know how I'm gonna go about saving for this or that. If I put my hand on your shoulder just like that, gaze into your eyes. Wait, maybe this is anyhow. If I was to say to you, friend to friend, and we trust each other very much, I would say Andres Yepes. He's the guy to talk to for all your financial needs. You're gonna say okay.
Yeah.
Yeah.
And that's why, I always work to get a referral, too, from people. Because if I was to leave my cards somewhere or have a billboard up. That's all great. People are seeing my name and, know what I do, but it doesn't count half as much as having Andres or you say, hey, if you need to sell your house, use Peter. He's going to be there for you.
Mm-hmm. You talk about that stigma even with real estate agents. Yeah. And before I was in this industry, I had it. It's like, for sale by owner. What is a real estate agent doing? And I was close to a few agents before I was in the industry. And I always, you joke about, it's like, what does a real estate agent actually do for you? Right. It's like, give me the key. I'll unlock the door myself. But being in this industry now, I've seen what they can offer. And then I've seen the benefit from, having one and not having one, the things that people may miss, the things that people may not understand, and then going in deeper and having that knowledge. It's more than just, opening the door for you and stuff like that. So I had a negative stigma towards realtors for a very long time. Mm-hmm. And now being here, it's, my thought has definitely changed.
Yeah.
So understanding or,
just letting your guard down.
Yeah.
Just to at least hear the information.
Yeah.
I mean, you put it best. I never quite heard it or thought about it that way. People don't even think twice about spending a couple $100 a month on a personal trainer, mm-hmm. To lose weight or whatnot. And that's great because I have used a trainer, and I definitely know when I work out with a trainer, I'm a lot more fit than I am when I don't.
Right.
I bought an elliptical machine in July, and yesterday my daughter and I are sitting on the couch. She goes, and we were watching something on TV where somebody was doing some exercise. She goes, have you used your machine lately? I said, I haven't used it in like 2 weeks. So make sure this weekend you yell at me if I don't use it. But yeah. So
can I just say something? When you said your parents are savers, and I think the cool thing about like what I do is I see at my age, I still see the full spectrum. I see the people that are accumulating. I see the people that have done it. And then I see the people that are enjoying the fruits of what they did, And so that's kind of neat because, again, it just gives me more motivation to say, this is the way to do it, because I just have enough clients that have done it. And I know the differences between having to worry about the market every single day because you still have to be invested so heavily into growth-oriented vehicles because you didn't save enough, or and so that's neat that I get to experience that in the position that I'm at. But yeah,
that's the difference between having a plan and being a gambler.
Yeah. It is for sure. And then referrals, that's where, your close ratio should be pretty high if people refer to you, but it's huge, right? Because it just means that you've done such a good job that people recognize that. Mm-hmm. I think for me it's interesting that clients love me when the market's great, and then they sometimes, not so much when the market's not so great. But the plan, you can't argue against that. Because it doesn't matter what the market's doing. If we have a plan, then you're going to know that we're heading in the right direction. And I still can provide so much value in that, as well.
The plan is good also because sometimes people lose track of what's important. You can always point back to the plan.
Yeah.
I had that a few months ago. I had clients, I listed their home, and they had a price they wanted to get, and they really wanted to leave the area they were in. They weren't super happy with everything, and they wanted something different, and they wanted to pay cash for their next house. They had a very small mortgage on. So I eventually got them exactly what they wanted with the offer, but it was maybe like $5,000 less. It really wasn't a lot of money, less than what they were wanted. And they almost didn't take the offer. And I tried so hard to get the other people up. I did everything. But they were at the point where they're going to leave and walk, and then who knows where you're going to be. So I just sat down, calmly reminded them of what we talked about the first time, the goal, the plan. And once they saw that, they're like, yeah, this is a great deal. So sometimes it's just always like going back to the basics with people and saying, this is what you want to do. This is what you told me you want to do. This, you just have to trust the process.
Yeah, no, for sure. And again, I think my biggest urge to people or reminder is just take time. Take time to work, whether it be with me or with someone you trust, to just put together a plan and then that way you kind of know, because life gets busy. We're all busy, and so but it's funny. I try to share this with as many people as possible. You work so hard not to make it count. You work too hard not to make it count. And so, but if you're not, if you don't have a purpose, if you don't have that plan, if you're not intentional about things, then your work years might be gone, and then you didn't have much to show for that. Right. So you don't want that to be the case. So
everybody wants to leave a legacy. You want something left behind for the kids.
Absolutely.
Too.
Yeah.
We talked about insurance today, and you said you've done this for 7 years. The one thing right before we finish, do you have any career insurance? And I only ask that because if this doesn't work out for you, learn some country songs. But I can't wait to hear his voice over the microphones.
I appreciate that, Jeff. I think you got a radio voice.
I don't. No.
You
maybe a radio voice, but not a country singing voice.
You came in here and it was like, whoa, good morning.
What is your heritage? What's
I'm Colombian.
Colombian.
Yeah.
I mean, you're a Colombian Scotty McCreery. With the deep voice. He does.
I can see that.
That's funny.
So
I hate listening to my voice. And my accent.
That's everybody. The more you do it, the better. You have a great voice.
So career insurance. Just throw a cowboy hat on, sing some Colombian country songs, and I think we're good to go.
And
so I won't even charge you for that advice.
In Colombia, we have some ethnic music, and then it's kind of similar to country music in that it's all about women or trucks. Unless you're a female singer, and in that case, it's about a guy or something else. But thank you, I appreciate that.
Yeah.
Well, Andres, thank you for taking time out and doing this, and hopefully people will be informed and get some good info out of this. And Jeff, as always, thank you.
It's great meeting you.
Here. Yeah, it's great to meet you too. Yeah,
we look forward to seeing you again. And Pete, thank you as always.
I can't get over the Pete.
Yeah.
Is this an acceptable thing to call you?
So
I'm sorry. Is it Peter? I'm so sorry.
So listen,
I've always known him.
The podcast world can know Andres married my ex-wife.
Nice.
And she got to know my family well. Obviously, we were married, and everybody in my family calls me Pete, and a lot of my friends from high school and college call me Pete. So yes. That's why he calls me Pete.
It's been since I walked in the room. You've said Pete at least 24 times, and never would I.
It's funny because since I've been in Florida, I always introduce myself as Peter, and there's a reason for that. It's not because I love Pete. When people call me Pete, it makes me feel like I'm home, so I love it. So don't ever stop doing that. But I used to introduce myself as Pete because everybody called me Pete in New Jersey. And when I would do that, I would say, hey, I'm Pete. They'd go, Keith? And it happened so many times. At some point, I was just like, I'm Peter. And I just kept doing that.
I know you as Peter. And even when I say Peter with you around, which I don't know how much I do. I have other terms that I won't say on camera when I refer to you. But if I'm outside of the room and Peter's not there, it's Peter Pappas.
Yeah.
I say the entire name. I never
Pappas.
refer to him as anything.
Frankie does that
Peter
too.
Pappas.
Yeah.
So
I think in the US you always shorten the names. So like I would probably be Andy or something like that, Jeff instead of Jeffrey.
Jeffrey, yeah.
Yeah.
If my brother ever called me Peter, I would think something was wrong.
Yeah.
That seems so weird.
Yeah.
Just even thinking about it.
All right, good to know.
Yeah.
I either wanted to correct it if it was a problem or understand why.
No, that's why
Jeff is like, Andres,
No.
you should really call him Peter.
show a little respect.
Very
Show some respect. He's the host.
Yeah, he knows me intimately, so yeah.
Well, so do I. Maybe not.
You know,
level.
I've never
Not to
done the
that
Pete
level.
with you. So now you know. Now you can call me Pete anytime you want.
Oh.
My nickname in high school was Pete Potatoes because
Potatoes.
Pappas is. It's not doesn't mean potatoes in Greek, but in Spanish, Pappas means potatoes. So they used to call me Pete Potatoes.
Peter Potatoes. Pete Potatoes.
All right. On that note, guys, thank you so much. This was an awesome episode, and hope you all enjoy it. Thank you.
Thanks.